This family is paying $2,236, so they're paying 4.7% taxes. This family actually pays 0 taxes, and they're getting back $6,247, of which the government's actually paying them $4,011. It's the same family. This is why it's important to understand taxes. So let's go through this. We're going to say that we're married, we're filing jointly, we have 2 kids, there's some school loans and debt that we have, and we're going to take a standard deduction in each case. We're going to use the 2023 tax brackets, which is effectively what you're filing in April of 2024, and it's 10% up to $22,000, 12% up to $89,450. So if you don't know the tax law, you take your $50,000, you take your standard deduction, you're left with $22,300 that you're going to pay taxes on. So the $22,000 gets taxed at 10%, so that's $2,200. The remaining $300 is at the 12% tax bracket, which is at $36. That total tax, if you add it all together, is $2,236, which if you divide this number by 50,000, your effective tax rate is 4.7%. Now, if you knew what you're doing, you take that same $50,000, you're going to take that same standard deduction, you're still at $22,300. Let's say they had student debt, and they remember they have student debt, and they paid loans the entire year. Well, they can take up to $2,500 in student loan interest deductions. If you pay more than $600 of interest, you'll get this 1098E, which helps you to file. If it's less than $600, you just keep basically your last form that you paid for the year, and you can deduct that. We take this student loan interest, we deduct that. We're now at $19,800. Guess what? We take 10%, that's $1,980. We take 2 times $2,000 because we have 2 kids, and this is the child tax credit per child. A maximum of $1,600 per kid is refundable. And then we also have earned income tax credits. I'll put a link below of how to figure this one out because this is a bit tricky. This is refundable up to over $7,000. For this particular situation, it would be $1,991 according to the IRS website. So we're going to subtract those 2 things. So we're going to take that $1,980 minus the 2 child tax credits, which is $4,000. You end up with $2,020 that's being refunded. $1,600 plus $1,600, you can refund up to $3,200 in this instance. So we're below that, so that's fine. Now we have the earned income tax credit, which is also refundable. So this is $1,991. That means that you're putting $4,011 into your pocket. You're getting paid 8% more than you actually made. The government's getting 0, or if you want to look at it, they're taking away $4,000 from someone else and giving it to that family. It's the same family. They're doing the same thing. They make the same money. They have the same number of kids. They still have school loans and all these other deductions. It's all the same. The difference is because this family knows, they get $4,000 back. Because this family doesn't know, they lose $2,236. I know when I was living in poverty, my family took full advantage of this. And as I've become more successful, I've even shown how even if you make more than $250,000, there's ways to pay less than 10% tax. If you see the benefit in this and you want to become more financially educated, learn how to make more money, keep more of your money, save money, invest, please subscribe. I have a lot of content on this channel. Thank you for watching. Have a great day.